Hi, this is Yeho. I'm macro option trader. Today is January 7, 2026, 7:38 p.m. Japan time. First of all, Happy New Year. And today I'd like to start by looking at the Japanese markets, especially the Nikkei. After that, I'll talk a bit about the current geopolitical situation and how it connects to markets. Let's start with the Nikkei Inigo. The market is still very strong. Today, close was 51961 yen. Yesterday, it was 52518 yen. So we saw pullback of about 600 yen. Still, the overall tone of the market remains very active. Semiconductors, defense related stocks, and small mega cap names are leading the market. The number of advancing stock was 2113 today. At the end of last year, trading value dropped to around 2.5 trillion yen on Sundays. But after the New Year holidays, we now seeing 3 consecutive days above 4 trillion yen. It really feels like a classic New Year rally. Volatility is also elevated. The Nikkei Volatility Index is around 31, and the Nikkei PL is 19.5, and EPS is about 2659 yen. In the bond market, the 30-year GBP yield remains high at around 3.49%. Overall, the economy still looks very strong. Now let's briefly look at U.S. market. The S&P closed at around 6944 points yesterday, and the VIX is low, around 14.7. So volatility in the U.S. is still quite calm. U.S. markets are not making big moves for now. Gold, however, is telling a different story. Gold has moved back close to $4,500, with yesterday's price around $4,499. Gold volatility is the GBC has risen to about 24.8. And this reflects two things: inflation-driven demand for gold and safe-haven demand due to geopolitical risk. Bitcoin is trading around $9,300. Okay, now the key issue I'm watching is the situation in both Venezuela. At the same time, China has restricted rare earth exports, and in January 2026, Japan is scheduled to begin test mining of rare earths near Minato Torishima. When you put all this together, it's clear that resource-related geopolitical tensions are becoming more visible. Let's talk about Venezuela first. Venezuela is one of the world's largest oil producers. The oil they produce is mostly sour crude, which contains a higher amount of sulfur. Japan mainly imports sweet crude from the Middle East, so the direct impact on Japan is likely limited. But the real question is, why did the US choose Venezuela? In my view, this is part of the broader US-China rivalry. China conducted a large-scale military drill on Taiwan in March and December of 2025. China imposed a large amount of sour crude from countries like Iran and Venezuela. In a conflict, all that can be transported and used immediately is far more important than renewable energy. The more oil China stockpiles, the higher the risk around Taiwan becomes. So, by pressuring Venezuela, the U.S. may be indirectly restricting China's energy supply. On the surface, this looks like Latin America issue, but underneath, I believe this is deeply connected to the Taiwan situation. China's response has been to restrict rare earth exports, and this direct affects Japan. That's why the rare earth mining project near Minami Torishima is so important. When we zoom out, Taiwan, Venezuela, and rare earths are all part of the same story. And the story is who controls resources, especially seabed resource in the Pacific. In the AI era, we need everything: semiconductor, electricity, rare earths, and many other raw materials. Seabed and resource becoming strategically critical. And that's the core theme driving markets right now. This is why resource stock is so strong. Companies producing resource, companies handling the material for semiconductor and energy related funds, and all outperforming. However, this also raises a concern. The rally that started in 2024 has a bubble-like structure. First, the money flowed into the semiconductors, then the semiconductor-related materials, and now into resource. Historically, this pattern often appears near the larger stage of the bubble. AI requires massive investment, but in the long run, this can lead to oversupply. At the same time, export restrictions can cause a surprise shock. So right now, this market face two opposite risks: a productivity-driven deflation shock and a supply-driven inflation shock. This reminds me of the board game Katem. In the late stage of the game, this is like item become extremely valuable, but the game ends at 10 points. If the game continued beyond that, resources would become abundant and price would likely fall. In my market terms, we may be around 8 or 9 points right now. This is look extremely scarce and valuable, but once we reach the end game, a price may stabilize or even decline. At this stage, the focus shifts from building infrastructure to using the infrastructure. That's when the service-oriented companies tend to outperform. Looking ahead to 2026, this transition is something I'll be watching very closely. It's also a US midterm election year, which historically tends to be the less favorable for equity markets. For the Nikkei, the range is roughly 49000 to 52000 yen. We briefly moved above 52500, but my core view has not changed. This is range market. The key question is how and defend this range will break. I'll continue to observe that carefully. Thank you for listening, and I look forward to another year with you. If you like this kind of analysis, please follow my contents with a long quit mindset. See you tomorrow.